Hello and welcome to Fair Isaac Tech Talk, where we discuss ideas and technology for decision management. I'm Darcy Sullivan of Fair Isaac, and today we're talking about risk management, specifically banking risk management, which is the main theme of our Interact 09 conference, which is coming up in March in New York City. We're talking today to Andrew Jennings. He's the Chief Research Officer of Fair Isaac, and he's also a former risk manager himself. He's leading a panel at Interact called After the Fall, the Role of Risk Management in the Post-Rescue World. So Andrew, with all the changes that are happening in the banking world and obviously in the economy around the world, what priorities are changing for risk managers?
Good question, Darcy. I think I'd point to two things. The most obvious one, which we all see and understand, is that lending practice has become much more conservative and cautious than it was. We've seen some lenders really recoil to start with, but I think now they've kind of got their arms around it and things are gradually relaxing, although they remain very cautious. And the second thing that I would point to is a sharp increase in capital costs. So we all read about capital being scarce. We've all read about injections of capital into financial institutions, but also the sense is that we haven't had all of the bad news yet, and so capital costs have remained high. And if you put those two things together, I think the challenge that it creates is that it's become more difficult to manage a profitable portfolio because you've got high capital costs on the one hand, you've got reduced lending, and you've got higher delinquencies. And I think back to the days when I was a risk manager back in the UK, and we used to worry about who you lent to and that kind of thing, but we didn't worry too much about capital costs. That was somebody else's problem as a credit risk manager, at least. And I think today credit risk managers have got that in the forefront of their mind, and the expense of the money that they're lending has become more important than it was before.
What influence are recent bank rescues and bank failures and government takeovers having on the risk manager's role?
Well, I guess it's limited executive salaries, but on a less frivolous note, it sort of echoes my first answer, is that the immediate reaction is more caution around. Now, I think we've got to play that out a little bit, and I think what will happen is that the bigger banks will probably get bigger, and we will see some more consolidation occur. So it's quite likely that, you asked a question about regulators, that for the big guys, the B of A's or the Chase or HSBC or whatever it might be, the impact will probably be fairly minimal. But for those that are nearer the edge of survival, then obviously one can expect the government hand to play a slightly more forward role and controlling role, and probably that will mean that they will continue to be more cautious. And the competitive theory therefore might suggest that the stronger guys will get stronger and be able to compete better. Because eventually it will come back to the stronger that your capital base is, the better able you will be able to compete. And one of my colleagues back home in the UK was telling me the other day that, for example, HSBC have been able to pass on some of the reductions in interest rate over there because they have a good, strong capital base, where some of the other players seem to be more concerned about preserving their balance sheets. And that will play out, I think, in more consolidation over the medium term.
With all the focus that's going on risk, does this give risk managers more power?
It's certainly high profile at the moment, and it's high profile for more than one reason. Some of it's good, but a lot of it's bad, and people are connecting the problems that we face with poor risk management. Now, having said that, there was also a survey that I looked at the other day where a large number of banking executives, CEOs, had been interviewed and said that 2/3 of them agreed that the head of risk management needed to play a more important role in corporate strategy. So my sense is that risk management isn't going to go away. Risk management will continue to be important, and I think out of the problems that have been created, actually risk managers will emerge as a stronger and more influential role within the bank.
What are risk managers looking to do differently today than they've been doing in order to manage their portfolios and their banks more effectively?
Well, we at Fair Isaac have always promoted the concept of champions and challengers to try and find out what works and what doesn't work. And I think what we're observing now is more open-mindedness, more willingness to try new things, because there's a clear need that policies do have to change and new things need to be adopted. The other thing that I would point to is an increased emphasis on trying to understand the impact of economics on the portfolio. So topics like stress testing have become top of mind. Concepts like optimization, whilst they've always been important, they've become more important than they used to be. You know, if you're trying to reduce exposure on a portfolio, for example, it's kind of, in a naive way, it's very easy to do that. It's also, as you do it, very easy to destroy value rather than create value, because you can alienate people, you can force them into delinquency, which wouldn't otherwise have happened. They can attrite and all those other things which have the impact of reducing profitability rather than increasing profitability.
And who's going to be at Interact having discussions about risk management?
Well, we're going to have people from all over the world, risk managers from all over the world at Interact. And so I'm hoping the session's going to be very much about audience participation. But we'll also have a top-rate panel as well. And for example, Bill Gray, who's a leading member of the risk management team at Banco Santander, which is one of the banks which is appearing from this crisis in reasonably good shape, is going to be on the panel. So we're really looking forward to hearing his opinion. But I'm also looking forward to being able to involve the audience in this discussion, because the more of that we get, I think the richer the debate will be.
That's today's Fair Isaac Tech Talk. Thanks for joining us. You can participate in Andrew Jennings' panel at Interact and see more discussions at Interact by coming to the conference. You can check it out at www.myinteract.com. We invite you to comment on this posting, subscribe to our podcast series, and watch more Tech Talk videos at fairisaac.com/Tech Talk. It's a great place to learn how to advance your business's decision management.